Folks, welcome on back for another fantastic edition of our weekly workshop, Traders Talk, here this Tuesday, June 4th. A little casual edition here this Tuesday. Actually, I'll pop up the webcam inside our live trading room. Got to twist the cap forward first, though, because actually repping my friend Andrea's bakery right here, Forno Cultura. Little red, little blue right here. So nice little casual edition. Great to see all of our students in chat, though. Margaret, Leonard, Jeff, Paul, new trial member joining us here. Brad, Margaret, Charles, Wilson, great to have back with us. Susie, wishing her well. Abdul, talk to you in just a bit. Danny, and all of us just joining us otherwise. Andrea, if you're joining us here, I got your nice fancy hat on right now, his bakery up in Canada. So great to have him. Great to have all of us otherwise on YouTube, Facebook Live, LinkedIn, all of our social media channels, otherwise that being at Cyber Trading U. So really quick, actually, if you're just joining us live right now, there you go. But can everybody hear a little background noise? Do you happen to hear a little banging, a little hammering going on right now? Right there. That's actually right outside my home office, little renovation. So if you happen to hear anything in this edition, my apologies, got to roll through with it. But otherwise, though, I'll tell you what, no better place to start off than right here on Hollow. There's actually a number of trades that we have to cover here in this week's edition and a bunch of emails, too, that did come in. So really quick, first things first. For any of our new trial members joining us, newly enrolled students joining us here, my name is Josh Levitan. I'm Fausto Senior Instructor at CTU. Each and every Tuesday morning, we do a live workshop here where we have the best chance to at least break down some of these trades that we've been calling out, that we've been focused in on, typing it in the chat board to our members here, and really breaking down the ins and outs, why we're doing what we're doing. So we do this every Tuesday morning, but this is more of a supplement to towards our main education, phases 1, 2, and 3 of our stock trading course. So with that said, we did just finish up our advanced class phase 3 this past week. We'll go into June classes probably in 2 or 3 weeks from right now. So with that in mind, at least I want to break down this hollow trade to start. And, for any of our new members joining us here, if you have any questions, definitely feel free to chat me. Definitely let me know via, the private chat feature in our room, or you could just shoot me over a quick email on the side, josh@ctutrading.com. But I just got off a coaching call with one of our students, Yehuda, just a moment ago. My apologies, tongue is tied already. There we go. So with one of our students, Yehuda, we just jumped off a moment ago, but it was really off this 165 level. Hollow here ended up making a nice little retest. Well, the shiny object in the room, I guess I should start with, is the MLGO. This stock, MLGO, led to an enormous breakout today. It was up like nearly 700%, I believe, off that peak. So you'd figure that for this stock that made a pop, there might be some other trades within the same sector, the same business, same industry that might make a sympathy play. That, hey, might not be up, I don't know, umpteen percent, like 700% on the day. Eventually, every roller coaster has a top. So it's saying that you'd figure MLGO is going to tank. You figure eventually this will pull back too. But at the time that myself and Yehuda were looking at MLGO go up, we're trying to figure out the next move. There was another stock here, WIMI, that we tried. I made a little money on the first half. Then I got out break even on the second half. It was right here at 125. And then I sold the second half at 120 right there, break even. So after that point, we jumped to hollow. And it was at that point, it was approaching resistance. So, basically for myself and for my traders that we work with, Fausto, of course, as well, we'll look to buy a stock once it breaks over major resistance. Here's my book map. Just getting it ready here. So for this trade, there was actually some things happening prior to all of this, prior to the next wave that just happened. We had an order on the bid, showed up for about 87,000 shares that led to the initial run up. Well, at that point, it pulled back. This order got pulled. This stock pulled back after a top. More orders on the bid started to show up. And that initially led us to think it would run up again, but it didn't. It took a long time for this to build. And that's where I told our students like Susie, Jith, Kathleen, Ravina, all of us here in chat, basically, it might look good at first, but if it's not doing what you're expecting it to do, then the probability of this breaking lower greatly increases. So truth be told, at this point in time here, there's zero interest for myself. It wasn't up until like really 10:45, 10:50-ish with my student Yehuda, where we were focused on this trade again because of the others. So let me ask right here in chat for all of our students, does everybody see where my cursor is on the far right side, that column where it says CVP? You should see that big spike of volume right there for Grant, Andrea. There we go, Andrea. Got you, my friend. Come on now. Got the Forno hat for you today. Does everybody see that big spike of volume on that column CVP, right? Kind of just remembered I had this hat too, Andre. I have a couple of your hats, so I remembered I had this one fresh. It's not dirty. It's clean. I'm like, I had to rep it today. 165, right, Sam? Absolutely, right there. And in relation to all of the other prices that traded across the day, at least this, I would say the volume at 165 is pretty big. Keyword big. And if our whole mantra is to follow the big money, and if our best entries to buy a stock are directly after it breaks through a big level on the way up, right once this ended up jumping into breaking above 165, I took this trade. Now, I set my stop at first a little lower at like 161, and then I told Yehuda if we were to do Traders Talk and I'm still in it, I moved my stop to break even, which is what happened. So at this stage right now, what's the deal? Like, what's our target actually? Like, where do we plan on seeing the stock hit resistance at? That I honestly don't have a clear answer on. So let's try and figure that out sooner than later. So, we had some resistance early at 184 on the ask. Then, different sellers showed up at like 190, 189-ish. Wouldn't shock me if we get up towards there. We didn't do that earlier here in the morning, in the first pop, in the first run up. So it would not shock me if we do get closer towards 184 at least. If not, maybe 189, 190. But, at least for right now, I'll keep this on the bottom right of my, platform here, my position manager. I'll just keep this number in mind. And the more it goes up, I'll be like, okay, we got to sell. Because there are other stocks I do want to focus on, stocks that we traded from earlier today. And then also stocks from yesterday. Speaking of my student Yehuda, he nailed a short trade actually yesterday. And that's what prompted me to look at that same trade. I want to jump to that because that's more of an exception in terms of, what we focus on and I guess rule set to a degree. Lauren says, stylin', I want a hat like that. Well, how about this, Andre? If you got some merch right now, Andre, you can drop a link in the chat. I'll give you the approval there. And also send me another hat too, if you don't mind. No, okay. But otherwise, at least, what was the trade earlier, folks? What did we say from before? What was the shiny object in the room from earlier today? Stock is up 700% at one point. What was that trade from earlier? The MLGO, right? And, before it was up 700%. It was up like 100% plus early in pre-market hours. So, this was up big already in the morning. There was some news that came out with a partnership between them and that other company, WIMI, W-I-M-I. Trust me, when this was at $4 in pre-market, $4.50 in pre-market, I don't think anyone, certainly not myself, was expecting this stock to be at $11, $12 and plus, at some point today. So as far as like leaving money on the table, how do you hold on longer? You don't have you can't answer realistically on a trade like this. The best thing to do is try and re-enter the stock if it affords you the chance later on. And if it doesn't, or if you feel like it's just up too much percentage-wise, there could be other trades to work with too, right? Just like Hollow. But at least here in pre-market, well, we knew this stock was up big in pre-market, the MLGO. Let's just jump to that. Some crazy halt action on this stock from before. Okay, so let's just ask first. Going into 8 o'clock, from the left side of this picture to the right side of this picture, what's the trend? This is not a curveball question. From the left side of this heat map to the right side of this heat map, what is the direction in this stock in which the stock is going in? All of us are saying down, right? So, first off, for a stock to be up like 100+% pre-market, we're interested in it, but that doesn't guarantee it's going to run back up. This could easily continue dropping right back down, pump and dump. That's it. So we want to focus, what's the direction of this trade first? Clearly it's down going into the 8 o'clock move, at least, for that part. So we need to see something happen. We need to see resistance get broken through. We need to see resistance get flipped into support. We need to see an iceberg on the bid show up, some crazy ladder, something extremely telling. Because otherwise, for as much up as it is percentage-wise, as much as you would want to think traders can jump in on it, until it happens, I'm not just going to catch the falling knife. I'm not just going to try. So if anything, after 8 o'clock, I guess one thing that happens at first before I looked at it, $4. $4 does build out as a pretty good level here, right? Look at all of the time here from 6 o'clock, 6:15, all the way to 8:30 and change. So actually, before I took this trade myself, it was off of 4. This was, I guess, the best level. Built out pretty nicely. It took a while to build out. It took like an hour plus to build this damn level out. But you know what? Eventually, the more times it stabs it going up, you figure there's a chance. So I guess that happened, right? All right, really quick though. Next, does everybody see that VWAP line, the white smooth line above $4 there? It's kind of at 420. That white smooth line, it's the VWAP line. Does everybody see that there on the heat map? Want to make sure no one's sleeping behind the wheel. I assume nobody is, just making sure, right? Irving, Wilson, Grant, Margaret, all of our students, Ravina, Sam, Charlene, all of us. Perfect. All right. Well, you know, VWAP line, pretty important, especially after a runner like this. It broke under it as support. Support should become resistance at first. Right here, looks like it hit it head on. Perfect. No surprise. Okay, well, it blasted over the VWAP here after 8:30. So it was even more after 8:30 than I thought in terms of my recollection, but it broke right over the VWAP here. And in chat, this is where I made my call out. So this is where I was telling you to watch out for, and as well as this is where I took the trade. So right off of the VWAP, let me scroll up here on the chat board. And the reason I do this is because I want our students to be extremely privy to following the chat and following what I'm posting, following what Rich is posting, obviously above all else, Fausto and his call outs. But, you know, that's where at least here, right around like 8:35 in the morning or so, I was calling it out, looking for that bounce. Here we go. Found you. That was at 8:41 here. I'll show for all of us on the recording side of things because it's important to follow, right? At 8:41, made this post saying, you know, MLGO needs to hold over the VWAP. Sorry to scrap your name there, Susie. MLGO needs to hold over the VWAP at 415 for another run up. If this wants to survive, if this has another chance in it, it needs to hold over the VWAP right around this 415. It broke over it as resistance, moved up like 20, 25 cents. When a stock breaks over resistance and it runs from it, I'd like to think that the first time it pulls back to that level, the first test is the best test. Entry, obviously it's risky because pre-market hours, this could fail. There's not much support on the bid at first, so, you know, easy to say there's like something that pops up later on. But, you know, there is risk involved with taking literally any trade. And you could even say furthermore in pre-market, and I'll ask for our students why in just a moment. But essentially here, hey, if this failed, I would have been getting out, right? Like, oh, where would you get out at this point? Probably as soon as it breaks under 415, like 410-ish maybe. Give it like 5, 6, maybe 7 cents. This was on a half-size position for me. It's not full size in pre-market really, unless if it's like a level or category 1 stock. If it's like a very slow-moving type of stock, maybe WIMI. If it was WIMI, maybe I could have done it there. My hollow trade's still floating around a bit. But, you know, this stock had a tight spread. It's possible this could have been some sort of move afterwards. But, you know, at least getting back to the MLGO, once it flipped the VWAP from resistance to support, clearly it ended up making a pretty good run. So that was the call out that I had in mind. I made this post at 8:41. And it was right at this point here. That's when it made the break out. So I'm giving you the play ahead of time there. Easy to say it worked out. Not every play does. But as far as how you can anticipate a big move shortly after, well, just make sure the level holds. If it does, it gives you that possibility. So I ended up getting out on this trade. It was like right around 475, 473. Andrea, I think he did even better, right? I think it got out like by like 490, I think, on that trade. But this was a stock that had numerous opportunities clearly on the day. I wasn't expecting this to make the type of run that it made, of course, but you know, it wasn't up nearly as much as it was at least at this time. So that's where I'll say to anyone here, if you missed out on it and it kept popping up, and if you feel like it's up too much percentage-wise, well, just take one look at what's happening live in front of you now. So you had great validation and great reason with your feelings and your thoughts of like, oh, I don't want to, you know, have this crap out on me and crap the bed, just break a lower low. Because that's how you can get caught in a trade like this. You know, stops can get skipped over here at this point. And especially in pre-market even furthermore. So that's where I'll ask our students here, you know, hey, easy to say this worked out. And if it didn't work out, yes, we'd be taking a small loss, getting out probably around 410, 408, just around that area. But let me ask our students, Grant, Kathleen, Susie, Danny, Leonard, all of our students in chat right now, why is pre-market so dangerous? What makes the pre-market environment so dangerous to be trading in? Great to see Lee, at least with us here on YouTube today. He's one of our longtime students inside our live trading room, just catching his chat just a moment ago. What are the dangers of pre-market trading? What makes it so risky? Why are we playing in a more dangerous environment in pre-market? There's a few reasons, actually. But the main one, right? No stops. Tony, Kathleen, right away saying Susie as well. I'm sorry, I've seen the chat there from a few of us. Jeff, Charlene, a lot of us actually, all the way up top there. So you can't put your seatbelt on. You have to kind of create a seatbelt, use a makeshift seatbelt. And that's a lot tougher to do, especially with a stock that is trading very thin liquidity out there on the order book. So let me go back to Hollow here really fast. This thing's pulling back a little bit. Probably move my stop up towards like 167, 168. I don't like playing the tiny game here. I don't like moving my stop up and up and up and up and up and up and up, just tiny stuff. Because when a stock breaks through a big level, well, we should be getting a pretty big move shortly after. I don't want to just have to maintain this whole thing as we're teaching, as we're going through. That's not the point of Traders Talk. So get back to MLGO. It's just to say that, yeah, in pre-market trading, you can't set your seatbelt. You have to make a seatbelt up. And with a stock that has this type of liquidity, not even the type of liquidity that Hollow has, that's good liquidity. If it has this liquidity, it makes it that much more dangerous and riskier for you to try and get out at your price. This is the way that I think of it. Ready? This is the way that I think of it. And it goes both ways because we have to contain emotion, especially when we're playing in a more dangerous environment. But it's like kind of learning to go from like the kiddie pool to the deep end of the pool, right? It's different emotions on the line, knowing that there's higher risk. I mean, hey, at the end of it all, you know that you can't set a stop order, and you know that you can't use a market order if you're comfortable with using one. I prefer limit orders. I want you to be using limit orders. But still, you don't have a market order to rely on. And not only that, there's actually on top of that, I don't think anyone answered this part yet even. There's actually no halts. You can't use a volatility halt in pre-market. There's news halts, but not a volatility halt. So what if the stock drops and keeps getting just smushed and crushed off of like some sort of direct offering news that comes out? Wouldn't shock me if MLGO comes out direct offering news at some point, if not today, tomorrow, whatever it is. Imagine getting caught in that crap. In pre-market, there's no volatility halts. So, yeah, good luck. It's very tough. And you know that. So there's no changing that. There's no way around that. So it's either, hey, you have to be that much more cautious with your trading and have that game plan set up. Or otherwise, you know what? Save your bullets for the market open when you do have your seatbelt. Save your bullets because from 9:30 to 4 p.m., you have 6.5 hours worth of time to make your day's pay. Let's say if you're even on TradeStation, 8 o'clock, you could begin trading pre-market at 8 o'clock. Okay, from 8 o'clock to 9:30, actually not even that, from 8 o'clock to 9:15, because by 9:15, you should be done with your trades in pre-market. You only have an hour and 15 minutes worth of time. So why are you trying to feel the need to squeeze out all this trading in pre-market in just that small time frame? That's if you can trade after 8 o'clock only. If you trade 7 o'clock, of course, extra hour. But point being is that if you are seeing this move up without you, made that move without you, so be it, right? I mean, hey, this clearly moved up higher itself. And then there were clearly other trades that moved up as well over time. The Hollow trade as well, the morning move that this made, the breakout that we had called out just before. There were some other stocks as well that made a move or two. How'd that Annex trade? This was one of my better trades on in the morning, but I gave a lot back, and it's actually trying to creep back up a little bit now. But, this ANNX stock actually was a nice little pop earlier today too. So there were plenty of other opportunities out there. I'm kind of jumping around a small bit, but it's basically to say that, hey, if there's something that's the shiny object in the room and you're kind of caught off guard watching it, easy to say right now, easy to think about right now after the fact and beforehand for the next one. It's harder to do in the moment, but you got to do your best to take your eyes off of that thing because either A, you're not going to make as much money on it because you're trading smaller size, or B, you're just not going to trade it. You're going to be too caught off guard. You're going to be too flustered. And if you're just watching a stock that you can't trade, you're just losing opportunity on all the other stocks that are moving out there that you can look to trade. So easy to say here, easy to acknowledge here. I think every one of us can acknowledge it now. It's hard to do in the moment. Just trying to do your best, at least just say, hey, you know what? If this is category 5 and I'm a newer trader here, well, hey, again, you could trade small size, but if you're trying to gain more confidence, at least with using our strategy on a general level, I'd suggest trading at least better stocks for you. Stocks that are easier on the eyes, stocks that have a tighter spread, better liquidity, slower moving maybe. Hey, Hollow is a great one. That was like category 1 or 2. Nice little breakout here, tight spread. So there's always going to be something else. So don't try and get too flustered if you happen to miss the profit potential on one trade, especially if it's out of your league, especially if you're too caught off guard with it anyway. All right. Like, hey, I want to go to the high stakes poker room when I go to the casino, but I'm not just going to watch people play the whole time. I'm going to eventually find another game to play that I can try and make money on. Now that's gambling. That's a gambling example. Here we're trying to make highly educated decisions with our money, with strategy at least, but otherwise the same risk is involved. Now, really quick, at least, I want to jump from Hollow. We did the MLGO trade, of course, just a moment ago. I'm not going to get into this whole move. Really, the key with taking any sort of trade that has the chance of continuing is seeing a retest of major resistance. So this is more Captain Hindsight. This is more easy to say after the fact, but clearly it seems like this built resistance off of 8. And the more times it stabbed this level in a smaller concentration led to the breakout. Simple as that. So maybe coming up, if this ends up doing the same, I'm just shooting from the hip here, but at 11, it's possible. I just say that because it held under, generally speaking, here, underneath here on a false breakout. If you're just focused around whole number levels, that could be a thought, right? Just jump to this trade, MLGO, and show the heat map here really quick. Yeah, oh yeah, this is definitely a level. Look at this now. This is a halt print. So once this reopened up off one of its halts, you have this big green dot, big green ball, and that right there indicates a clear level for you to work off of. I mean, right now there's 12,000, or right now there's 26,000 shares on the ask at $12. Well, if that's an orange line here on the heat map, and if we're calling that like a big level, 27,000 shares, then exactly how big is this? 62,000 shares. Exactly how big is that in relation? So clearly 11, for this reason above anything else, is your major level to work off of. Who knows? The more this can keep testing this in this shorter period of time, or in a shorter period of time, there is a case to see that next wave. But, hey, I'll tell you, I mean, for stocks that go up 100%, this is where I tell you, hey, we see stocks go up 500-600% before. That's not too far-fetched, but it's more far-fetched to see it continue, to see that 500-600% stock get to that 1,000% gainer. It's not as often that we see that. So the more any stock goes up percentage-wise, of course, Fausto above anyone else, myself and Rich as well, we become more reluctant to trade it because we know what happens. We know the end result. So that's the key. Okay, so really quick, I'm gonna get to Sam first because that's like, just kind of the most recent right there. But I actually have a few chats that I have to answer as well, like emails, and actually one that came in just somewhere different on the trading room. I want to make sure I don't forget about that actually. So from Sam, on Bookmap, the CVP column, is that made up of all trades submitted or only the trades that have been exercised? That is, if a trade sell or buy has been pulled, is it included? No. So if an order gets pulled from the book and it doesn't get filled, then CVP column won't count it. This just shows the total volume that's been filled based off of per price level. So that's where at the 165 from earlier, you could at least see at 164 and 165, even before it retested it the first time again, it was building up nice. And that was from consolidation, mind you. It was just from the sideways movement. But it's just to answer, it's from the volume that's been filled, the volume that's been completed, filled, executed, not from the orders that get pulled. So like this wouldn't be counting here. Like, see how this goes from orange to like bluish black? That order got pulled, but that won't count. See how CVP is like very tiny right there? So that's a great question to ask because, you know, at least in phase one, we cover that a bit just with that bookmap class. Actually, a good reminder, Sam. Coming up this current month in June's classes here for the phase one stock course, we're going to be covering that all, at least, you know, intro to level 4. I'll go a lot further in that 60-minute class. But at least though otherwise, with heat map, you know, of course, that's where it shows that CVP column, that histogram. Let's go back to Hollow, because on TradeStation, for any of my friends on TradeStation here, you have the matrix column and it shows this histogram here on the right side. This is the same exact thing. This shows you per price the volume that's been filled, completed, executed, whatever you call it, just, you know, the transacted volume across the day. That's where you can see right here at 165, that's sticking out pretty nicely, right? So, you know, at least for TradeStation, that's a nice little tool to have miscellaneous. But bookmap, at least, there's part of this feature at least makes it, you can zoom in and out and these numbers change, right? The bars change, the CVP column changes. Looks like this is trying to inch back up a little bit right now. That's all right. I wasn't trying to stay in this trade for the whole damn time if it was going to be slow. It's kind of like, you know, for lack of better phrasing, right? When my student Yehuda, like kind of crap or get off the pot, right? I thought this would make the higher high and beautiful pop. Otherwise, I don't really care to be in a trade that's slow all day. So I didn't mind just getting stopped out there to take a little money. But otherwise, at least, you know, that was a great question from Sam. Let's get to this next one as well, because again, this one came in kind of a different view from our trading room. I just caught it here a bit. Sometimes, so really quick for all of our members here, just always email me. That's where it's easiest for me to address any of your questions, especially if it's just like, you know, an hour before traders talk, like, you know, in the morning, the night before traders talk. Shoot me a quick email. At least it'll be easier for me to see. This one just came up from like a part of the trading room at the top from Alvin. Hi, Josh. I was just checking into sending some of my trades for review. I'm consistent with my risk management. I can't seem to size at the appropriate times. Well, by size, does that mean size is in large size versus small size? Or are you using the word size in terms of holding on to a trade for an extended period of time? Because right now this is trying to go back up a little bit. You know, hey, maybe shoulda, coulda, woulda. You know, if I didn't move my stop up, I could have been in this trade. That I'm not really going to use as a great example, because let me ask our students here to begin. This could at least kind of steer me in one direction here, Alvin. What time is reversal time? For our students here, what time do we typically expect reversals at? 10:15, 10:30, right? And I maybe give it 15 minutes after that if it's a strong day. So if you're in a trade and it's 9:45, 9:47 in the morning and the stock is moving in a set direction, there's no guarantee it's going to reverse at 10:30. There's no guarantee it's going to reverse at 10:15 to 10:30. There are times where it may do it earlier, right? There are times. We focus on what happens more often than not what happens 100% of the time, because nothing here, nothing within the stock market has a 100% success ratio, at least with it. For as much as the market has gone up historically, there are down days within the stock market, right? It's not just an up-only market. What I'm referring to here, at least, is that with reversal time, it's around that 10:15, 10:30, and that's more often than not. So if it's 9:45, 9:47 in the morning, and you're in a trade and moving in a nice direction, if it hasn't really gone up too much percentage-wise, if it hasn't really moved up too fast and you feel like it's prone to hit resistance sooner than later, then there is a better reason to hold on to that trade, right? To try and ride the wave, if that's kind of what you're referring to. Now, on the same side of that coin, hey, I'd feel more confident trading a larger size at 9:45, 9:47 in the morning compared to right now. Hey, it's a nice stock to trade still. I mean, even if this does push up higher, it's a nice stock, level 1 trade. I feel stronger with size early in the morning compared to right now. I feel stronger with size later in the day than I do right now. So that could also answer your question as well. You know, simple timing of the day. You figure more often than not, there's less momentum as we head into this time of the day. This is exactly why we do traders talk at 11 o'clock and after. And then from that point, if there is something that's looking strong, I have no problem taking that trade and having the full confidence to at least enter it, but do it on small size. let's actually get to one right now. Actually, this will kind of segue me to a trade I wanted to get to. GPCR. Oh my God, Yehuda had a great trade from yesterday. He took like a $2 short, $2+ short on this GPCR. You might look at this trade and be like, well, why would he try and short when the stock's going up the whole day? And my answer would be, well, that's a great question, because normally we follow the trend. But it's not that often that a stock is up like 75% like this. That's like more expensive. So this does have some bigger room to pull back in terms of dollars per share or cents per share. But this stock was up 75% in pre-market, or not pre-market. This stock was up 75% throughout the day. We didn't trade the stock at all on the way up as well. We missed out on this whole move on the way up. So if you're thinking of timing of the day, this actually started to make a breakout early in the morning. Here's 10:30. You'd figure this might be a chance to try and short it, because you know what? It's reversal time, and let's just shoot from the hip and use 42 as a whole number level. Okay, it breaks under it. This actually could have been an opportunity to try and short it based off that nip under the level right around reversal time. Well, if that's going to be a big move shortly after, let's have it happen. The more it just holds under the level and does nothing, of course, it's more prone to continue the original direction there and continue going up. So it did that, easy to say. We did not call the stock out at all until Yehuda posted a short. Like, we missed out on this whole move simply because A, it's expensive, and then B, there's just other trades cheaper that are making a better push or as good of a push. This is a pretty nice push. So, making as good of a push as GPCR that had a tighter spread, more liquidity on the book, easier in that sense. So I don't mind having a trade like this fly up without me. But when Yehuda took his short, he posted a profit at that point. First thing is, hey, he made money on it. I'm rooting him on. So my first thought was like, oh, nice trade, man. That's a great short. And I look at the chart. I'm like, what the hell? This stock, I didn't see this at all until now. Like, what gives? And I'm scratching my head. I'm like, ooh, high risk there, taking the short right there. It's just, that's my first thought is not always that. But I'm realizing, like, wait a second. This stock actually is shortable. It was easy to borrow. It didn't even say the letters HB next to it. So then my head starts spinning. I'm like, wait a second. This is actually a takeable opportunity here. There's actually a chance that this might actually continue. Like, really? So let's think about levels right now. Obviously we talked about the price like 42 just a second ago. And we said that's kind of just like a whole number level. For our students here, Lauren, Sam, Ravina, Grant, Danny, Irving in chat, Margaret, all of us otherwise, aside from whole number levels, dollar levels, $1 levels, what is the next wider set of levels that we would normally look to use? Think of like US dollar bills. Think of US dollar bills. Not the $2 bill. I'm not trying to throw a curveball here. Not a $2 bill. Wish I had a $2 bill. It's a nice collectible. A $5 bill, right? So after that would be 5, and after that would be 10. So, when we think about these more abstract psychological levels, well, what's the nearest psychological level around like 62? Yehuda got in from like 62 or so, made like $2 or so. It was a nice trade from him. But what is that nearest abstract level or number to the price 62? 60, right? There we go. Yehuda, Margaret, Sam, all of us in chat saying 60, right? So that was my first thought. I'm like, oh my God, okay, so like, what if this can hold under 60? Well, it wasn't holding under it. It was building over it. So until this breaks under this level here, there's no entry. There's no thought of taking the short at that point. My risk involved with this was that I did take this trade at the level. I was like waiting diligently for the break. And by the time it pulled back, I took it right at 60 and I set my stop right above this consolidation at 60.43. Keep in mind, wow, you're risking like 43 cents on this trade, Josh? I am. Absolutely. 45, 50 cents on this trade? Yes, I am, because it's on a tenth of my normal size. It's 100 shares. So, part of being a trader at CTU is like kind of getting the perspective of like points, right? Thinking about cents per share and points. Well, on more shares, I would not be doing 50 cents per share risk. I would not be. That is why I need to lower the size so I have that flexibility. There's intent with that. It's not just because it's like a lot of money into the position. That's part of the reason. And that's part of the reason, my friends. The other part is so I could allow my risk to adjust for that volatility. So with that, this was on 100 shares. I took it right as it nipped the level, and I had to wait another bar or two. Thankfully, for my sake, this was building a pretty nice bearish Fausto flag, and at that point, obviously, led to a good pullback. But the reason that I wanted to focus on this trade was because this is something that we normally don't consider as much at CTU. Because, I mean, hey, if you were focused on that earlier and had your stop set, that's one thing. You know, if you have a uber conservative stop at 42 bucks and you took it there and then it breaks above it and you get out, minimal harm, minimal foul. Actually, minimal harm and no foul because it's a good strategy. But you want to go with the momentum, right? This is where I've been saying, like, hey, the Bitcoin stocks, you know, they could be good shorts on a day trade, but why are you playing with fire? Why would we try and short that? You know, long term at least, that is. Long term at least. MLGO, I would not be trying to short this stock too much. Of course, the more it does go up, eventually you think it can drop. Well, GPCR, it's not that often that we see a stock this expensive up this much percentage-wise. So there's still great risk involved in case if this fails to break under 6. Even here, I took half my trade out like at some point in this run. First part of it, where the hell is it? There we go. First half I got out like 55, 85. And I was thinking, okay, if it ends up pushing back up over time, like I'll get out wherever, but as long as it's not breaking back over my level. Because the overall trend on this trade is still most definitely up. So actually, how about this? Let me ask our students in chat. It's definitely more expensive than this stock. But do you recall a stock that made like as clean of a short squeeze as this recently? A pretty expensive stock. I mean, there's actually a couple of examples you may look to answer here for me. But there's a couple of more expensive stocks recently that have actually made this type of parabolic move up or, you know, up like 60, 80% in one given day. Insane. So on those situations, if the stock does, if the stock looks to break under big level, it's at least showing downward momentum, selling pressure. So it gives you at least the initial attempt. But I want to see if anyone has good memory here, see if anyone is thinking what I'm thinking. There's probably a few answers that you can give. Does anyone have a stock in mind that's a little more expensive that made a crazy run up at some point recently? Let's see if we can test our students here briefly. Wow, how about this? You know, I was going to allow a few answers here because you can have more than, you know, there's definitely a couple that fit the shoe or fit the foot. But Yehuda actually had the number one stock in mind that I was thinking of initially. It was actually SMCI. Other answers I was thinking afterwards was Dick's Sporting Goods. Remember Dick's Sporting Goods, this pop that it had like last week? Yeah, I would not want to short that stock out the gate. Abercrombie and Fitch, I would not try and short this stock out the gate. When GameStop was pumping up at first on the initial pump up, I would not want to be shorting that thing. Later on, obviously, it did drop. But, you know, that's where even SMCI, yeah, when this was running up and Fausto was screaming it as a swing trade up to 1,000, I don't think that was a good idea to go against the grain, only because it's up percentage-wise, right? Because if you liked it so much at 600 to short at, because it made like a 100% move in this time, then A, your account got killed. This thing flew up right away. And B, you have to be drooling over it when it did hit 1,000. So the time has to set itself up pretty properly for that opportunity to go with the downward momentum. Like here, it's easy to say, but this didn't end up actually making its bigger drop off until it built a lower high. Maybe like off the previous spike here, pulled back under it, held. You know, that's just very shoot from the hip, right? That's very shoot from the hip. But the same to be said with GCPR. Like there is extremely high risk trying to short it only because it's up a lot percentage-wise. But if there is a level that's strong from the daily chart, that's one thing. But then otherwise, this ended up thankfully providing that opportunity to where once it breaks through a big level on the way down, and as long as it doesn't break back over it, it does give you that better sense to ride the wave. So the first half of this trade, I got out at 85. Then the second half, or maybe that was the second half. That may have been the second half. First half may have been at like 57 or so then. That's what I thought at first. There's the short. I'm not going to fish through this whole thing and find it. I took half out. It had to have been around 57 or so. What was that? 55.85. Oh, there we go. 52.74. That's right. Okay. Just been a long afternoon at that point. So I forget my entries unless if I had my position manager showing the orders themselves. But yeah, 52.7. Oh, pretty good on the way down. But otherwise, at least it was smaller size. So it's not something I was like intending on doing until Yehuda even posted that trade. Wouldn't have done it if he didn't post that trade to begin with, honestly. So probably owe him a nice steak dinner. But at least to say that that's not my normal cup of tea. And the reason I'm showing that to you here is because, well, the thing that gave me the confidence to even attempt it was simply the fact it was breaking through this big, abstract, round psychological level, $60. It's more of an assumed level, but it was building up pretty nicely. And for that reason, it led to a great short. Have a few emails I do have to get through here before we wrap. And with that, I just want to show shoulda, coulda, woulda, right? For students that ask me like, oh, why didn't you move your stop up on trades? You took a break even. You could have took money there. This is why, my friends, because normally I look to trust my levels. So I moved my stop up. I took a few penny profit. It's what happens, right? Hey, if you go against your first instinct and you don't trust your levels and the stock holds it perfect, this is what you end up missing. So the best thing to do is just not beat yourself up over it. It happens. So maybe there could be a new level in which I could enter from here on this trade. Maybe it could be off of 175, 176 if it builds from there next. Shit happens. It happens, folks. That's all. All right, so let's go through email here, see if there's any other questions that came in. This one from Jason pretty quickly. Josh, I know that you have a class discussing halts. Can you just go over the halt from earlier today on the MLGO? So yes and no. So MLGO I can go over a bit. I don't mind using that as the example, but oh my God, you've got to be kidding me. All right, we'll use MLGO as an example. We'll use MLGO as an example. Why not? This thing's popping right back up. How could we not now at this point? Okay, so this thing is crazy. This might end up being 1,000% gainer by the end of the day at this point. This is freaking nuts. Okay, so this had resistance at 11 earlier from the halt. What a break here in between. It's going to get halted. So when a stock moves up or down too much in a shorter amount of time, it will get halted, especially during the regular hours like this. If it's during pre-market, it actually won't. We just mentioned that before. But when the stock reopens up, normally you tend to see a lot of chaotic movement. Truth be told, and this is just me shooting straight, there is no trend with how many halts a stock could have, how many up halts first before a down halt. There's no rule on that. It's just a matter of as much as it is up percentage-wise, you don't want to be caught in a down halt. Obviously, this is a pretty crazy move and pretty historic pop the more it does move up percentage-wise. But we're not trying to be perfect with the exit as much as we are trying to be pristine with the entry. So even earlier today, like one of the things I wrote to you in the chat and all of us here, kind of my quote here I like to show at times, every trade begins with the entry, and every entry that we take begins with a big level. Put that on like a poster and have that framed. But every trade begins with the entry, and every entry begins with a big level. So what that means is when a stock gets halted, you'll typically see a print come in, a dot, a ball on Bookmap right away when this reopens up. So you see this here, here, here. Most recently at 11, right? Most recently at $11. I was not expecting this pop to happen so suddenly, mind you, but it's just simply to say the more times that this could nip this level in a shorter concentration, that's where this is a little bit more surprising still. If this gave this a little bit more of a fight and it was nipping it in a smaller time frame, that is something I'd feel pretty bullish on as far as actually considering as a trade. This just ripped right away here. It's just higher risk to assume. It kind of nipped it right here at first, but you want more of a fight. This is not a great attempt as much. This could even be something here at this point. It's trying. If it's not going to go, then watch out. But the more times in a smaller concentration, that's for any type of trade. That's for a halt. That's for not a halt. But simply put, when a stock does get halted, you typically have 5 or 10 minutes for it to reopen up. And then at that point, you see a lot of chaotic movement. So it doesn't guarantee the stock's going to keep going up higher. I oftentimes see stocks crap out immediately after one halt. So you don't want to just jump in to jump in. There's actually a few things moving up pretty nicely right now. You got a few crypto stocks going up right now. CLSK, Robinhood, Coinbase, a few trades right now looking pretty good. All right, so let's keep it going right now. I just want to answer one more that came in from a student from chat earlier. Again, please keep in mind, my friends, if you have any questions, just at least on the morning of, day of, definitely shoot me a quick email. It's the easiest way for me to go through it before we finish up in full. It doesn't always guarantee me to answer the questions if it is in private chat, but otherwise, from my student Ramesh, you're asking, is it possible, or how is it possible to keep an eye on one trade and try to enter on another one? Is it practical to have more than one trade open? So my answer to this question, right? This is just where my mind goes, because I like giving you a real life example because it makes you kind of think of it more simply, more simplistically, perhaps. But, if anyone here is familiar with the sport baseball, even if you don't like it, if you know how it works, well, I'd feel that you'd have a lot easier of a time learning how to hit the 40-mile-per-hour lob, the softball, right? The slower pitch, right? And the more that you hit that pitch, you gain confidence in it. Then you say, okay, well, maybe I could step up to the 50-mile-per-hour pitch or the 60-mile-per-hour pitch next. If you go from 40 to 100, you get pretty overwhelmed. What I mean by that is this. That could be in terms of volatility of stock, but that could also be in terms of how much your eyes can simply interpret in one sitting. So before you start learning how to trade 4 stocks at a time, start learning how to trade one, right? And I don't even mean trade. I mean that also in the sense of just watching and observing. When I first started teaching, my biggest thought in my head, and this was an incorrect thought, I'm showing you like where I grew as an instructor, let alone as Josh the trader. I thought that it was going to be more beneficial to follow 16 different stocks on one screen. I swear to you, 16 different stocks on one chart. If anyone does that here, unless if you're making $1,000 a day or more, which let's just look at ourselves in the mirror and ask that question. If you are, great. If not, let's just be honest with ourselves. It probably isn't gaining you too much. It probably isn't gaining you too much by watching so many things at the same time. What I learned because of that was, let's scale back. Let's take a step back. Instead of 16 freaking stocks, let's cut down like 8. And then after 8, I realized, the hell with 8, and let's just do 4. Like, I don't need to follow 8 at one time. Just follow just a group of 3, 4, whatever. And over time, I'll cycle new ones in, take ones out. But I don't need to be flipping through all of these different trades in order to make money. That's all we're here for. We are here to make money. So with that, you can't just watch one. You can't just watch one stock and that's it, because if you only watch one and it does nothing, then obviously it's counteractive. But at least at that point, you don't need to be trading more than one stock at a time at first, especially if you're a new student of CTU, even if you've been with CTU for like a month or 2 or so forth. If you only have access to phase 1, I'm taking you as a relatively newer trader or student of CTU that hasn't gone through our full library just yet. So with that, I'd rather you learn to trade one at a time, and you could follow more than one at a time, but I wouldn't want you to be in more than one at a time at first. And then the more confidence that you gain with, just being in one at a time, if you're doing well day over day, if you're hitting your goals, then of course that's where you have a better chance to react better trading 2. You don't need to be trading 4 if you're jumping up to 2, right? So just keep that in mind as well. If you are trading more than one at a time, that's 2. That doesn't mean 4. That doesn't mean 4, 5, 6. The more objects that you're looking at, the less of an ability that you'll have at honing in on the finer details of each trade. So that's where, for students that use Bookmap, actually on the Thinkorswim version of Bookmap, you could launch like a bunch of different boxes here. If you see this here on the screen, launch all these different windows here. Thinkorswim has like a window similar, like a little option to like launch multiple heat maps on their page. It's actually a cool idea. But how many finer details can you focus in on with watching like 5, 6, 7 different things at once? I can kind of at least cycle through each of these at least. But even that's overwhelming. Fausto does a great job at clearing a lot of the washed up ones off of his screen. Like AI here, I don't need. That's garbage. Envas here, I don't need. That's garbage. AMC's been garbage. I don't even know why it's been up there. AMD, I like to have up just as a side lister, so keep that there. That's fine. This thing's garbage. So the more garbage I have up, the less of an ability I have at following the better ones even. So you want to have a nice balance. But as a new trader joining us, it's key to not get overwhelmed, right? Because you want to focus in on the finer details of each trade, right? So there's a middle ground. As a new student, though, it's better to be on one side of that ground than the other, meaning the more that you're watching like 8, 10, 12 different charts, you're not going to do well. I'm just be blunt with you. I'm sorry. You're not going to be a consistently profitable trader. You're not going to be one of our better students here at CTI. I learned that lesson myself. And I will tell you, as students like Michael J. and Lawrence, who have been with CTU probably 7 years each, if not more, right? Probably 7, 8. They know best, right? And Andrea and I'm gonna stop there because I don't want anyone to feel excluded. I could probably say 15 other students, right? But it's just to say that you don't want to be too overwhelmed. Michael says still at 2, occasionally 3. Lauren says the same thing. He trades 2 at a time max, often just 1. Right. So, and again, this thing's flying around. Don't get me wrong, but is this the only stock that you could trade? No. This thing's moving up right now, right? Or it was. So, there's other trades out there. You got the CLSK out there. You got the Robinhood out there that's still trying to push up a little bit. So, hey, folks, we are going to finish up Traders Talk right now. I'm going to jump onto a coaching call with one of our students, Abdul, here coming up in a bit. And otherwise, maybe even a couple more afterwards, actually. Long day on the sticks. So I'll be back later today at 2:30 p.m. Eastern time. Follow my friend Andrea here, Forno Cultura up there in Toronto, Ontario, Canada, right there. And, make sure to check out his nice bakery there. I'll send you some nice goodies as well. But, otherwise, I'll be back later on this afternoon, 2:30 p.m. Eastern later on this afternoon. And then for all of us in the trading room, we'll continue the audio commentary at 3 o'clock like we normally do. Talk to you soon. Take care.